So I have a question for all the stock pickers out there. I have a question for you. I mean, I'm not a day trader. I don't get my information from Tom Lee. I don't get my information from sketchy YouTube channels that say this is not financial advice. My information comes from Tom Maynard Kane, Robert Schiller, Benjamin Graham, Burton G. Macchio.
Diehards Conference in San Diego, and I'm happy to be sitting here with Jack Bogle, who is really the epicenter of this conference. Jack, thanks for being here. Let's talk about the current market environment. It's crazy. Give us your take on what's going on, and what do you think investors should be doing?
Well, of course, I've only been in this business for 57 years, and I have never seen anything like it in my life. I've never seen anything like the amount of speculation that's going on in the market, which is basically twice as much stock trading, twice as much turnover as we had in 1929, the previous high. And we have these frequent days. We've had 37 of them in the last year where the market's gone up or down 2% or more. And when I came into this business in 1951, we might have had 3 or 4 days a year like that. 12 times as many wild and woolly days as history would have said. So we've taken the whole focus of market participation in our capitalistic system here in the U.S. From one of investment to one of speculation. And I happen to think that's a tragedy in which the investors are the losers, and which, of course, somebody's a winner. Wall Street wins. They make $650 billion a year in fees and commissions and all that kind of thing, which means that investors lose that much to the market. So it's a system that's crying out for change, although I never would have guessed the change would be so abrupt. I never would have guessed the speculation would have been so rampant. I never would have guessed that credit would be so easy. I never would have guessed that credit standards would be so devastatingly low.
So what?
Right here, I'm going to be sharing the 5 scriptures plus a bonus scripture on how I became profitable. These scriptures had a tremendous impact, not only on me personally, but on my trading journey.
Until I really started trading consistently and started seeing it. And once I started understanding this pattern, I was able to literally go into the markets consistently and print money, okay?
Deal with MicroStrategy, right? You guys know MicroStrategy is one of my strong plays, and I did something that will probably...
If you don't take profits, they will eventually drop, especially if they've hit the target resistance levels that I've given you. Now, in the case...
Still going.
Tesla said it was a huge opportunity for this week, and especially with that dip this morning. And then the thing is, it did break below a support level right around.
A variety of ways to trade in this market, and people are making life-changing money. I'm very excited to hear that. Speaking about being on the inside, a few videos ago, I had asked those of you that have made money from my trade.
I'm gonna show y'all a few positions, man, show y'all what's going on. First, with the Palantir position, we still trying to bounce back on the calls from earnings, because, when you miss on earnings,
It's the same thing that makes most sense practically all of the time, and that is to consistently buy an S&P 500 low-cost index fund. Keep buying it through thick and thin, and especially through thin, because the temptation gets, when you see bad headlines in newspapers, maybe to say, well, maybe I should skip a year or something. Just keep buying it. American business is going to do fine over time. So you know the investment universe is going to do very well. The Dow Jones Industrial Average went from 66 to 11,497 in 1 century, and since that century has ended, it's more or less doubled again. American business is going to do well. The trick is not to pick the right company; it's to be, because most people aren't equipped to do that, and plenty of times I make mistakes on that. The trick is to essentially buy all the big companies through the S&P 500, and to do it consistently, and to do it in a very, very low-cost way, because costs really matter in investments. If returns are going to be 7 or 8%, and you are paying 1% for fees,
that makes an enormous difference in how much money you have on retirement.
At the annual meeting for Berkshire Hathaway this year, you introduced a special guest to the audience of 40,000 shareholders who were watching. It was Jack Bogle. Why did you want to recognize Jack Bogle?
I think Jack Bogle has done more for American investors than any other person connected with Wall Street or the investment process, because he, with a number of other people, he came up with the idea of the index fund. He wasn't the sole thinker behind it, but he was the guy that implemented it and crusaded for it. But now there's trillions of dollars in low-cost index funds. Those people are going to have better lives. They're going to have better retirements. Their kids are going to inherit more money because of Jack Bogle and his efforts.
That's where my information comes from. Therefore, 95% of my money is in index funds, and like the other 5% is in individual dividend stocks, and the rest of our finances is tied up in real estate. But all the stock pickers out there, if you don't know me, I'm Larry of the No Regret Show. I've been trying for the longest to help people build wealth. A lot of people do things the wrong way. Maybe this may pertain to you. A lot of my subscribers, we already know how to invest the right way. Therefore, our portfolios grow continuously. You know, even when the markets are down, our dividends are being reinvested. But I have a question, and I'm going to ask some questions in this video, and this is probably going to pertain to you. First thing, do you sell your winners? Meaning, did you guys say your winnings? But do you guys sell your stocks that are up to take profits? Or do you sell your stocks that are down because psychologically you want to feel like you won, so you sell all your stocks that are up and keep all the losers because psychologically you don't want to lock in that loss? Do you know in those books I read, psychologically, majority of people do that? Not only do they create tax problems for themselves because they probably didn't hold on to those stocks for over a year, they locked in a little bit of gains, they're going to pay taxes on it, and they're holding on to losers, and therefore that's what creates bag holders, because you're holding on to losing stocks forever or for 2 to 3, 4, 5 years hoping they go back up, and a lot of times they don't. Are you one of those people? If you are, you're investing the wrong way. You might want to follow my channel. Do you constantly pay attention to the news? Do you constantly pay attention to financial analysts like Tom Lee, Jim Cramer, what Alex Karp and CEOs be talking about? You do know they're manipulating you, right? They're manipulating you. While they're touting stocks to buy, the firms they work for and the companies they run, they're exiting. Meaning they're having you hold on to that while they're exiting in huge profits. Meaning a lot of these big institutions take large blocks positions. They call their buddies on Wall Street. They call the news outlets. They pump it. They take huge blocks. Social media gets a hold of it, and then they pump it, and then you buy it, and then they exit. They don't look for crazy profits. Like, they don't ever try to look for 1,000% return or 100% return. Do you know a lot of these institutions are happy with a 2%, 1%, 3% of return? A return is a return for their clients. They don't care how much the return is. If they get, a return on 51% of the stocks that they bought, that's an up year for them, and they can market that in their fund when they present it to pensions and stuff like that. Did you know that they don't care about the huge, home runs and stuff like that? That they don't worry about that. They want a bunch of little returns that they could market to people who purchase their funds. Here's another thing. Are you always buying the hottest stock? Meaning, example, all right? Why are you not buying the EV stocks of the past? Now, I don't own any of this stuff any of the EV stocks, and I could say this is financial advice. I don't got to say this is not financial advice. This is financial advice. I'm just asking you a question because I don't throw out stock tickers and stuff like that. But do you hold all the hottest stuff now? Like, what's hot right now? I really don't know what's hot. I don't look at any of that speculative stuff that doesn't pay a dividend long term. But why are you not buying the EV stocks that were hot in 2020, 2021? Why are you not buying those? Or the EV suppliers, like the ones that were gonna supply the electricity to the EV cars. Like, why are you not, other than Elon Musk's company, I'll say the Tesla, what other EV stocks are you currently buying? If you love them, and you loved a lot of these stocks in the $60, $70, $80 range, why are you not loving them in the 60 cents, 70 cents? I mean, you do know if a stock is gonna moon, it's gonna moon if it's a penny or if it's two. I mean, hey, it could go bankrupt too, but if you're gonna get growth, why wouldn't you buy it if you bought it when it was $50 or $60, why are you not buying that stock now? Why do people, that's the definition of buying high and selling low. People buy stocks when they go up, crazy after social media dedicated a whole channel to pumping it, and then when it crashes, nobody buys it. Like, why is nobody buying the EV stocks? Or the cannabis stocks that were popular before that? That's a question you got to ask yourself. What type of investor are you? I mean, I'm an index fund investor. I got it all. I own it all already. I caught the run up of the EV. I got the AI. I got all the crypto miners. I got it all, baby. I got it all. And I got a dividend portfolio that has some really good dividend stocks in it that have been paying dividends for a long time. So, I mean, what's in your portfolio? If you love, damn, I gotta come out and say it because this is gonna make no sense if I don't. If you love GME and AMC back when it was mooning to catch the MOAS, or it's gonna go to the moon, why are you not loading up on it now? Why do you only load up on things people talk about? Catching great growth, if you are going to gamble, is going where nobody else is. While nobody's talking about it, you are loading up on it. So if it ever gets profitable, and if it ever blows up again and people talk about it, you've been buying it the whole time, and now you've owned it for over a year, 2 years, 3 years, 4 years, 5 years, 6 years, and now you ease on out when everybody else is buying it. That is taking a huge profit and then saying, damn, you know what? I was doing what everybody else was not doing. Like, why are you not doing that? Like, that's my question. Why do people only buy what's hot? Well, why don't people buy what's not currently hot right now? I mean, if you're gonna do it, right? Like, am I right or am I wrong? You tell me if I'm right or am I wrong. If a stock, example, Palantir is $130, right? Now you'll have the people that say they've been buying it since $7, $8, $9, $10. You don't know. Come on. I mean, you can't verify them. They're in the comment section, right? You can't verify them. A lot of people don't show real proof. They manipulate their portfolios and only do like the past month or 6 months. They never go back to lifetime of that portfolio where they've been buying up here and then they sold all the way down there. But like, are you buying a lot of the EV companies now that they're pennies stocks? When if you are gonna buy them, you could stretch $500 or $100 a long way more than you could stretch it if a stock is 130, right? So that's my question. Like, what have you been doing? If you've been doing everything I just named, you're not a good investor. I'm sorry. You're not going to like this. You're going to argue with me. It doesn't matter to me. I haven't lost any money in the past 10 years in the stock market. I haven't lost anything. The only time I sold out was when we bought real estate in Aruba. And I still have the real estate to show for it. You understand what I'm saying? I didn't sell out of my portfolio to go to the mall, to buy a car that depreciated. We bought real estate in Aruba that's actually skyrocketed in value. So we took a large amount out that was long-term capital gains, where I got taxed at very, at the minimum. It was like 15%. Or the maximum 15%, whatever. I'm not even the smartest guy in the world, and I've managed to invest pretty damn well just by not being my own worst enemy. Went and bought real estate, turned that into passive income because we got renters. And if I do need to replace a transmission or a tie rod, or if I want to go, if I wanted to go back to school, to get my high school diploma because I'm a high school dropout, if I wanted to do that, I would take from my savings account. I wouldn't sell out of portfolios and create tax problems. Because are you an investor or are you a day trader? If you're a day trader, how's that working out for you? If you're a profitable day trader, you should be able to quit your job and live full time for the rest of your life off of day trading. You shouldn't say, oh, I do it part-time. If you're a great day trader, or a good day trader, you don't need a W-2 job. That means you're profitable enough to sustain your lifestyle. And if you can't, that means you're a part of like the 95% who is not profitable long-term in day trading. Ask yourself, can you quit your job right now and live your life? Put food on the table, have medical benefits for you and your family, make your car payment or pay your car insurance, pay your cell phone bill, pay your rent, pay your mortgage. Can you buy clothes, food, travel? Can you do all of that with being a stock picker? If you can't, you're a part of the 95% who is not profitable. Oh, and the 5% that is profitable long-term, it's not just retail. It's everybody. It's Wall Street that has these crazy algorithm computer machines and people around the world that are constantly picking stocks. That's the 5% you're putting yourself in. You got to be rational. You got to be a rational thinker. You're a part of that 5%. Wall Street, Goldman Sachs, all the robo-advisors from Betterment, Wealthfront, you're a part of that? You're a part of the billion-dollar algorithms that they have? All the stock pickers on social media, all their subscribers that follow them, all the analysts on the news, all the CEOs, all the hedge funds, all the pension departments, all the 401k departments, you're a better investor than all of them? Most of the time, people are their own worst enemies. If you're one of these people, you might want to think about stop doing what you're doing, becoming an index fund investor, and then once you figure out how to be an index fund investor, meaning you don't jump in and out of index funds. You don't hold an index fund for 3 months and then sell out for one that has 1% more return in gains. You don't hold this ETF or trade ETFs in and out. You hold them. If you can hold them longer than 3 years, I say 5, but if you can hold them longer than 3, then after that, you should be looking, if you want, or you could just be an index fund investor the rest of your life, or an ETF investor. You'll still get to where you want to go. I'm telling you, you'll still outperform majority of everybody here in this damn world who is trying to do what you're doing. Mathematicians at MIT can't even figure this out. Then if you want to start picking dividend stocks, then you start picking companies that have been paying a dividend for a long time and build a portfolio with a little bit of your net worth to have cash flow and income in the future. And you're not doing this for growth. You're doing this for income. People want to make this a competition, and then that's when they fail. They want to say, my portfolio is beating your dividend portfolio, but how much money is your portfolio churning out? You may have 20% this week or this month, but for the year or 2 years, I'm up 8%, 9%, and it's churning out $3,500 a year, then $4,000 a year. Do you see what I'm saying? Cash flow, index funds, then you get the growth, then you got savings accounts. So hope this video helps. No regrets. I know a lot of people are not going to listen. Some people will. They'll be better off, and they'll thank me when they're in their 50s and 60s and 70s, when their kneecaps start clicking and their backs hurt and they start having all these medical conditions, and they go, damn, I'm glad I'm sitting on $500,000. Damn, I'm glad I'm sitting on 1.5 mil. No regrets. Get it.